Guess I should turn on my mic. It's probably helpful. Alrighty. Give a few seconds for people to funnel in here. Time to learn. Yes, sir, Mike. Yes, sir. Top Step 100% winning days is crazy. It's been a good stretch. It's been a good stretch. We'll start here at about 7:05. Today we're going to go over how I create a daily bias and why generally until my bias flips I don't trade the other way. So if I'm long, if my bias is long, I don't trade short until my bias flips. And it actually happened today. So we'll have a good example here. So 2 minutes. It'll save automatically, Big Papa. I'll do an intro here, just because I'm probably going to make this into a YouTube video. But so we're going to do the lesson. I'll do my intro. I'll go through the lesson itself, and depending how good the lesson is, I'll make it a video. But then after, I will open it up to Q&A. Probably going to sit here until about 8 o'clock. Maybe a little, shut it down a little earlier. We'll see. We'll see how things go. Alrighty, so 1 more minute. I am definitely not saying your name anymore. Alrighty. All right. What's going on, guys? It's Expo Jesse. Today we're going to be looking over how I look at my daily bias. So we have a good example of this today. Yeah, I hope it's an informational session and that you guys enjoy. So without further ado, let's go into it. So for those who don't know, I trade primarily the strat and ICT. ICT, most of the strategies that I use from all of his. He has tons of different systems, but I usually just use the PD arrays, which are premium discount arrays. They end up being a fair value gap, an order block, a breaker block, pretty much those three. Sometimes a BPR, balanced price range. So I guess four things. but I end up looking for those on higher time frames and then see if how price reacts to it. So why is that important? Why is higher time frame important if I'm looking at the 1 minute chart, 5 minute chart, and so on? Well, when you think about it in terms of where is price going and how's it going to get there, that's when you'll understand. So if you are managing millions and millions and millions of dollars and you want price to go to a certain area, let's say you want it to go long, but you don't have enough shares yourself to force your will upon the markets per se. Well, what you're going to have to do is you're going to have to figure out how to make the market go short so that we can get a lot of people in on the same side, the same team. We all want to go long, right? So knowing that price is going from somewhere to ultimately end up somewhere else is important. I think a lot of times newer traders, and I struggled with this for a long, long time. Newer traders just, number one, they want to start the trend. Fault number one of a lot of traders. And number two, they don't think 2 steps ahead. They only think about what's right ahead of them. They only think about, oh, we're going short. They're not thinking, oh, we're going short, but we're ultimately going long here, right? So I think that's one thing that differentiates immature traders from mature traders is that one characteristic. So so we'll take a look at this. I'll do this every single day. I'll go on the 1 hour chart. Sometimes I'll go on the daily chart as well, and it's kind of easy to see here that the NQ ultimately didn't have enough juice to keep going short here. So if I do that magic, so we tapped under that. That's called sell side liquidity. We tapped under that sell side liquidity and we ended up going higher. But where are we going to stop? We could have stopped right here in this fair value gap. And we actually did on this candle. I'm sure if I go back during the day, which we'll actually do that a little later on, but we'll go back to September 29th and look at it blind. We came back and revisited it twice and rejected all 3 times. And then after we had enough friends that wanted to go long, then we broke through. We didn't have any real reaction to this fair value gap, but these 4 I know are hourly PD arrays. I'm pretty sure they're fair value gaps, but let's take a look. So this one's a order block. Remember, if you haven't seen my Smart Money Concepts video, an order block is the last up close candle before a downtrend or the last down close candle before an uptrend. So it's basically the candle that jump started it all, right? So there's an order block here. There's a fair value gap here that's already been traded through a little bit. There's another fair value gap with an order block inside, and then an order block above there as well. So this topmost rectangle is going to be the one to watch for me. So if I pull price over here to the right, so going into Wednesday close, I didn't trade that session, but Thursday, obviously I know that we went down, but let's look at this from I just stepped up to the computer. I have this level marked as a level of liquidity for us to go short again. It doesn't mean we have to, but this level is where I'm going to be looking for myself to be going short. And so if I drop down, I'm a little ahead of myself here, but so let me go here. So now I'm in this liquidity zone that I already marked down from higher time frame bias, right? So now I'm dropping down, and it looks like I got in a trade here short, but I'm dropping down. Remember, I'm looking for price to react, and then this is where I go down to my entry model, which generally it can be a ton of things. My system is not a see this, do this every single time. My system is, I have 2, mostly the strat and ICT, and combined on both of those, that's my system. Neither of them have to really be, they don't have to both align at the same time, but it does help. Obviously when they align, it's a much higher probability trade. So if I'm looking at this here on Thursday, I believe Thursday was pretty choppy, but I came out with 2 wins. But as I'm going forward, I see that we're putting in a lower high here. And then so then we came and actually swept liquidity. So an equal high with a liquidity sweep. I'm expecting price to break this structure here and then maybe retest the fair value gap before going further down. Let's see if that's what happens. Here's the fair value gap. This would be the break a structure fair value gap. And remember, as long as the fair value gap has the body close in it, wicks can be above. Wicks do the damage. Bodies tell the story. So, and same thing with stop losses. I had a question about that a couple days ago. For me personally, when I put a 20-point stop on, usually it's a hard 20-point stop. But if price is wicking all around, or if the day itself is just kind of trash, I will hold through wicks until I have a full body candle close. Now, if price is 10 points past my stop, I'm going to close. But, or 5 to 7 points past my stop, I'm probably going to close. But if it's just wicking up and then goes right back down, or it's the candle close, wicks up, goes back down, then I'm going to stay in. So here we have reaction at this fair value gap. So I'm probably looking short. I might have gotten in right here on that little wick down, and I think I did, and kind of scraped close to my stop loss there. Like I said, would have held through the wick. And then we have a break of structure. As soon as this break of structure happens, I'm pretty confident in hitting 1R. Once I hit 1R, my stop loss is to break even. And then I ultimately got stopped out. It probably comes back, retests that fair value gap before ultimately going where it wants to go. But obviously yesterday this is pretty gross price action. I would expect it to do this where it comes down, retests, and then just goes. Not like that, but you get the idea. So that's how I have been playing my daily bias lately. The biggest thing to recognize while you're looking at the chart is, like I said earlier, you have to think a step ahead. Why is price going to go to this area? Where would I go long? Where would I go short? So if I'm entering this short right here, which that's probably the most optimal short, right at that break structure, stop loss above, where am I going to go long? Well, I see immediately here, I see this fair value gap as a likely candidate. And then you see here, and I didn't look at this before, guys. I really didn't. You see that wick? That wick just grabbed all the liquidity it needs to keep going up. Comes, taps this fair value gap, not enough to keep going through, comes back down, grabs more liquidity. It doesn't need to go into the fair value gap for that, but then ultimately it breaks through. So that is essentially how I figure out daily bias. There are a couple more steps which I'm going to add into here. So jumping on to the strat plus ICT. The strat talks about full time frame continuity. If you haven't watched my strat video, I'd highly recommend it. There's a lot of content out there about the strat. I trade almost strictly the strat for swinging options. I think it's amazing for swinging options. You have a hard stop loss, you have a hard take profit here, and then it's a very, very systematic, versus my scalps are a little bit more they're a little bit more subjective, but they still have a system behind it. So again, if I'm looking at this chart from the 5-minute chart, the 1 minute, I got a good short scalp here. But if it struggles to stay above this, or struggles to break below this fair value gap, I'm thinking in the back of my head, okay, it just struggled to break that fair value gap. Where is it going? It's going to go reach further into this fair value gap before it goes down. Okay, so let's look a little bit more. It was super choppy yesterday, but as you can see, I didn't trade this. I think I was actually I was helping my brother install some flooring at his house, so I actually didn't even see this price action. But if you have the mindset of where is price going to ultimately go where I think it's going to go, here I'm thinking, okay, if it's not going to go short now, where is it going to go in order for me to get short? And the answer is into a higher time frame PD array. So, like I said, we broke structure here, had a good short. I grabbed 1R there, pretty good trade. I grabbed 1 hour later in the same day. Pretty good trade. But if I would have been around, let's go back here. If I would have been around, I see that we've broken structure to the upside. Until we close above this rectangle, my bias is short, because higher time frame tells me that there's a lot of liquidity at that rectangle. And it's not just because I drew a pretty rectangle on my chart. It's because there's a fair value gap there. I think this one was an order block, but it actually might be a fair value gap. But as you can see, we're still sweeping liquidity. I also have a video on how to tell if it's a liquidity sweep or if it's a break of structure. The TLDR, I would highly encourage you guys to watch the whole video, but the TLDR is if price doesn't close above, then it's a liquidity sweep. If price closes above, then it's a break of structure. Here, price technically closes above, but the last few seconds of a 1 minute candle are always going to be manipulated. So I'll wait to make sure that the next candle closes, or at least goes 2 up before moving. So we're back at where's price going and why. So we didn't have enough momentum to go short. So where's it going to go? It needs to go up to go down. That's how it works. That's how the market works. It needs to go up to go down, or it needs to go down to go up. So if we don't have enough friends to go down, we need to go up. So we went up, and now we're going to look for, technically, I guess ICT's, this is probably out of ICT's window, but we're probably going to get a change of character here, and then the entry's right there and the retest of that fair value gap. And then there she goes. Let's take a look at today. Today I caught a runner. So let's look at, that's Thursday, today. So we were bouncing off of this 1 hour PD array the whole morning pretty much. So I had a bias of being bullish pretty much all morning. And that's pre-market, but 6 a.m. you probably got a signal to go long out of this. Yep. Market structure shifts. Kind of choppy, but you do have a market structure shift fair value gap there. But until we crossed under this area, until we close under this 1 hour PD array, then I'm most likely thinking about going long. Even knowing that we just rejected off of here, I'm thinking in my head, we don't have enough momentum if we're bouncing off of this. We're going to go up here and then go down. And my little arrow there is messing up. But this all circles around to, I've said it 4 times already, where is price going and how do we get there? So if we don't have enough momentum and we bounce off of this PD array, there is no shame in going along to a point where there's going to be liquidity. Now, I will say, as a disclaimer, price does need to move. You need to be on the side of the trend. So right now I'm on the side of the 1 hour trend. But I'm not on the side of, if I look at the 4 hour trend, we just made a new low. I'm not on the side of a 4 hour trend. I want to be sure that the time frame that I'm trading, I'm on that side's time frame. So for me, that's a 15-minute, 5-minute, 1 minute. And as long as those are telling me that we're at least short-term bullish, I have no problem playing long, even in a downtrend. But if the 15-minute and 5-minute are in a bullish trend, I don't want to be short, even if I get a 1 minute signal. Okay, so we'll go back to the 1 hour chart, step forward a couple here. So this is what I'm seeing at 9 o'clock. Again, 2 minutes ago, I just told you that if we're bouncing off this area, this is the target. I'm wanting to go short. So until we can break this target, I had a bias of being long all morning. I think it was right because technically we have a ton more to fill all of this fair value gap. So I have no problem going long into that. But let's get into market open, 9:45. We grab liquidity up here. Technically, you could have been looking for a short after that. Let me delete this little arrow. Okay. So then let me see on my Discord. I can see exactly what time I got in. So I got in for a short. I got in for, what is going on here? At 10:35, I got long and got stopped out. We're still a ways away from that. So 10:35, let me see if I can see what I'm seeing. That was a lot of words. So 15-minute break of structure fair value gap. I have no problem going long here. Also, pretty sure that this would have been about the golden zone. Exactly the golden zone. Yeah, I have no problem taking that loss. Let's go forward here. So, oh, that's the 11 o'clock candle. Getting caught up here. So I took a 20-point loss there, no biggie. And then took 20 points for break even before taking the short at 20 points. I shouldn't react to this because there is going to be a point for Q&A, but Wall Family says, but don't forget ES filled a large fair value gap. Correct, but NQ doesn't care what ES does to the point. So ES can still fill that fair value gap, but it doesn't mean NQ has to reject because ES did. ES is a tech, is based on, it's a tech ETF, essentially. It follows the Qs and similarly, while ES is SPY. So yes, it is worth it to look at both ES and NQ, but don't trade them like they have to follow each other or one has to. If ES is shooting to the moon and NQ is struggling, it doesn't mean that NQ has to shoot to the moon because ES is. Sometimes they don't, and that's called SMT divergence. It's another rabbit hole. But yes, in this case, I'm sure ES did fill the fair value gap and probably did help to push us down. But I just want to be clear, it doesn't mean that every time that's what has to happen. And it's easy to get caught in that trap of thinking, well, ES is going up, NQ hasn't started to go up. I'll just throw a long on ES or on NQ, and it has to follow ES eventually. So on from there. Okay, so then let's look at 1050 was my entry for the short that went for 100 points today, which would have been right about here. I think I got in on this break of structure that as we broke the daily low from pre-market, and my entry was at 47. This was not a strat entry. Looking at it, it's not really clean for a short anywhere. Really, the entry would have been nice up here. This is where looking at multiple time frames can help, because sometimes you'll see a fair value gap on one time frame and not another. Yeah, it wasn't really clean. So this is where ICT, people who trade strictly ICT, probably got left behind. But in this case, I got in at 47 and called that out live. You can watch that video from this morning. And targets, right? So another question that I got when I asked about topics is how do you determine targets? Well, for me, when I'm trimming, am I looking at the wrong one, Nick? 1040 was a short, but I got out at break even. The one that actually went was at 1050. And actually my short at 1040 was at 69.25. And that would have been a much nicer one, but it wasn't clean enough for me here, so that's why I didn't take it. But back to what I was saying, the targets. So again, the whole preface of this lesson is where's price going? How does it get there? So if price is going to go long eventually, then where is it going to reject? Well, for me, I don't hold my whole position to take profit. I trim based on risk to reward. So I typically am trimming. It depends on price action. I get this question a ton, but it depends on price action. But I'll typically take off about a quarter risk at the first trim, quarter at the second, and then a tenth at the third trim, and then kind of go from there. Maybe another tenth at the fourth trim. But I'm trying to hold more of my position for longer, and going to a 20-point stop helps me do that. Number one, that's a change I made recently, is a 20-point stop, and I'm able to hold more for longer, and my P&L has definitely shot up because of it. But so I don't trim at price targets, but if I'm looking for areas to add, which I do, I'll be looking for where to go long. So here's a 1 hour PD array. I'm thinking that we'll react here before we decide what we're doing. Here's a gap from Friday close to Sunday. Might also react at that point, but I'll mark that there with the 1 hour fair value gap, and we'll see how price reacts to it. So remember, if we're looking at the 1 hour, I want to see a 1 hour close under that level before I think that we're going short for the whole trend. And we never closed. So we pretty much, I mean, I got 100 points out of it today, but NQ closed right at that 1 hour PD array. So at the start of next week, what's my bias? If we can't break and hold under here with a 1 hour close, then my bias is long until we get back up to this level. Remember, we already closed above this one, so that one's no longer in effect. But these three above are. So as soon as I can get an entry signal of a reversal to go long from here, my target is right here. So I'm going to take a long, somewhere like this, stop loss with a close under that fair value gap, and targeting the next area of liquidity, which could stop right here, right? Here's a 1 hour PD array, which is a fair value gap in this case. And here's another one. So it could stop at either of those, but I'm going to have a long bias until we reject one of these two. So that is that. That was pretty quick. That's not, I said a lot of ums, so it's not going to end up being a YouTube video. Sorry to disappoint, but we are going to open it up to some Q&A. So if you guys have any questions, now's the time. Go ahead and type them in chat. We'll go through it. I need a drink. Hi, fitting in. Just long. Hey, I'm down for that. It looks long. This looks like a pretty nice reversal. I might want to see it come down to this fair value gap at 15,000, but Steve asked, do you have a single video that goes over your whole strategy? Nope. I should, but that would be a very long video. So I think what I'm going to do is over time make little snippets that go in depth on each part, because if I went over my whole strategy, it's probably an hour, maybe 2 hours long, going from A to Z. I had some motivation earlier this year to make a to Z trading video, but I got into it and it was just going to be so long. So I just need to make videos and make it into a playlist. Wall family, what percentage of your account are you risking per trade? Typically, it's about 10% to 20% of my drawdown limit. So if I look at my trade tracker, I can go through and see how many times I've lost 5 trades in a row, and it's pretty darn infrequent. I don't know how to look at that, like if there's an Excel function to say how many consecutive minus 100% are there, but I'm looking through this year. It hasn't happened to me in 2023. I've had several that are 3 in a row losses, which is probably the 3 strike you're out rule for me. I don't see any 5 in a rows. Looking through 2022. No 5 in a rows in 2022 either. So that's why I risk 10 to 20%. I statistically do not lose 5 times in a row. But that is a personal journey. Obviously, none of this is financial advice. I'm just telling you what I do. If you do lose 5 times in a row, then 20% is probably not the smartest idea. If you lose 10 times in a row, probably not the smartest idea. So you got to figure out from your metrics what your risk is. All right. Friday for Verily got Phil Long. I love. Is that same? Okay, wait. Do you always start with the same amount of contracts? Sometimes. If price is really clean, I'll enter with more to start. If it's really choppy like it was yesterday, I'm probably only starting with half my size, maybe even 0.25%, and then scaling up to a full size as it goes in profit. Let me read this again. Friday Fair Value Gap, Phil Long, I love. You mean the Fair Value Gap long, so this Fair Value Gap to go long? Yeah, I'd like it. At least for 100 points. I'd like it to go up higher, but I'm not sure if that's in the cards. If I were a guessing man, I bet it's coming down to this Fair Value Gap. I bet it does something like boom, 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 wherever else from there. That's kind of my guesstimate. All right, keep the questions flowing. I'm just cleaning up my chart. There's a ton of liquidity with the 3 touches to, I think you mean the 3 touches on the hourly chart. Yeah. Yeah, and based on where the candle closed is my favorite part of it. Since the candle closed inside, and honestly, the body was it's higher than halfway of the wick or the whole candle. I feel good about that close. Do you use an indicator for the fair value gap and liquidity zone? I do. My Expo toolkit, it's on my YouTube, called My Own Indicator. I just had a developer add a bunch of different indicators. I did not make it up. It's from like Nephew Sam and then some free indicators as well. But that's where you can see, like, if I hide my drawings, this is what it looks like. So blue, I have my indicator set to blue fair value gap, means it's a break of structure fair value gap, and gray just means a regular one. What is up with Big Papa and Big K Daddy? You guys got some names out there. All right, where would you start if this was overwhelming? Haha. Well, if this is overwhelming, then I would start with the basics of supply and demand. That's why I don't want to make one video that's 2 hours long, is because number one, people would probably skip through it and then get lost at where it was, and number two is people would see a 2 hour long how to trade video and probably get a little bit intimidated versus being able to chop it up. Paper said last Friday. Oh, way down here. Yeah, the one that I marked probably. This zone. Yeah, I'd like to see us go there and then go for a longer trade long. That was just looking for that 30-year auction to go short all day yesterday. I don't even look at auctions, to be honest. All right, 10:10 Eastern. I wanted to short on that lower high rejection at the previous low. 10:10. Oh yeah, after we broke the initial structure here. Yeah, that would have been obviously a really good short. I would have wanted, after that change of character, I would have wanted price to come up here. Do something like break, boom, boom, boom. That would have been the cleanest price action for me. Oh, and then he said that's the one. I'm getting caught up still. Okay, so you have to have multiple accounts. Then I'm assuming based on how many contracts you get to keep the risk percentage on point. I'm lost. No, it can be for one account. Let's say that I'm on a 50K account on a forex platform and I get 10% drawdown. So I have $5,000 to risk. I will risk 500 to a max of $1,000 per trade on that one account. TN Gamer said, does liquidity grabs count towards filling fair value gaps created as long as the body of the candle closes above or below the fair value gap? As long as the candle does not close beyond the fair value gap. So if it's a bearish fair value gap, as long as the candle doesn't close above, and then vice versa for a bullish fair value gap. Is your indicator free? Yes, it is. Blonde with brain, do you prefer Top Step to Apex? I like Top Step. I like Apex too. Both have their own place in this world. Would you say a break structure fair value gap and filling and touching fair value gap is your bread and butter? A break structure fair value gap is for sure my bread and butter. Mostly because if you think about it from a logical perspective, a break structure fair value gap is the fair value gap left behind when we had enough force to take out and change structure. And when you think about it from that perspective, there's going to be a lot of liquidity in those, typically speaking. It doesn't mean that I get into every single blue box fair value gap, but it does mean that I hold those with a little more weight than the regular. Trading myth, what do you look for in prices approaching a fair value gap? I want to see either wicks. As soon as we touch the fair value gap, a wick down, meaning that we got liquidity that we needed, or I want to see some sort of setup, either a strat 212 down or 212 up, one of those two, a strat 3-bar, an ICT setup where we have a fair value gap left behind, we go and enter that, etc. What do you think of Top Steps Education? Honestly, I just tuned into theirs for the first time today, so I'm not sure. They look like they know what they're doing for sure. Top Step drawdown, a lot smaller, like 2K on a 100K account. That's why 2K a day. Yeah, but I'm talking the full drawdown. I think it's 3, maybe it's 2.5. So like with me and my risk on 100K, it's about 200 to 400. I asked this in DM, will you add to your positions on break structure on 15 and 5 minute as opposed to 1 minute break structure? Do you favor the 15 and 5 when adding? Absolutely. There's going to be a lot more breakout or fake outs on the 1 minute chart than there is on the 5 or the 15. And so I will hold more weight to the 5 and the 15 when I'm trading, especially when adding. Like if I can add on a 212 down, for example, here this morning, would have been a good example. The 212 down, stop loss above the inside bar, would have been a good add as well. Alrighty. No more questions? Give it 5 more minutes. My boy Paper Profit. If you guys want to learn options, obviously I know a little bit, enough to make money, but that means a wizard in options. He's who I learned how to do earnings and such with the proper way, not the gambling way. So big shout out to Paper Profit. He's the peanut butter to my jelly. He trades options. I trade futures mostly. Can you talk about your use of fibs? 1 second. Do you still use the same strategy on your how to use a strat video? Yep, pretty similar. Obviously, strategies change and develop. I'll probably in the next couple weeks have a new video on my strategy as a whole. So keep an eye out for that. But yeah, it's pretty much the same. Who gambles? No, I'm just saying like earnings. Most people gamble. They just take a call or a put. You do the proper way of earnings. Ives, yep, taking advantage of IV. All right. Can you talk about your use of fibs? Yeah. So I also have a video on fibs, but fibs are, it's again, the markets are ran on algorithms, and algorithms like percentages. You see this all over in the real world too. But I have my fib set up like this. Oops, that's not my fib. So I have the 1, 78.6, 61.8, and 0.5. Those two numbers are gold because that's the golden zone. 0.382 and 0. Then I have negative 0.25, negative 618, and negative 1 as targets if you're just doing fibs. Again, I have a whole video on fibs that's longer than the time I have here, and it goes really far in depth. But Fibonacci's are basically just the measurement of a move. So the 0.5 move, if you are big money, and again, if you're big money managing tons of money and you want to get in at the best price possible, it's going to be at a discount. And the discount area is 50% of the move. So the golden zone is 50% to the 61.8. Don't ask me why the 61.8. I have no idea. But what I do know is it works. And so if you draw this little pretty rectangle right here, then just wait for price to move. Again, I didn't draw this on anything. Let me do that just to avoid confusion. Usually I can spot these pretty easily. So let's say that this is, you go from the start of the move to the end of the move. And here, price came back to the 0.5, and then ultimately we chopped, but ended up moving out of this. Came back and retested the 0, came back, tested the 61.8, and then if I draw this way over here, it hits the 0.25 trim. But that's just fibs. I'll add fibs if I'm thinking that it's a retrace, just to be able to get into a trade at a discount. Okay. Why are there literally dozens of options discords, but only a handful of futures alerts? Well, if you ask me, my recommendation, there are only 2 servers that I'll recommend. There are a lot of servers that have people who are just business people, and they just know how to make money, and they pay for my alerts or somebody else. And they're just business people. They're not traders, which is fine. There's a place in the world with them. But if you're looking for education from people who know how to trade, there's only a certain amount of servers from there. But there's a lot of good servers out there. You just got to find one that fits your personality. It's there's a reward like PG. True. Question: will FET be chairing the Gamblers Anonymous meeting? True. I got my kids tonight, so I'll be chairing pizza, pasta, and chaos. Ooh, pizza. I got some Tombstone in the freezer. That's probably my dinner. Jesse, can you do a quick TLDR recap before closing out on the topic determining your daily bias? Sure. I'll do it right now so you can clip it if you want to. So a little recap on the lesson. Basically, figuring out your daily bias is thinking 2 steps ahead. So you got to think about where price is going and why. So if we're going to go short ultimately, and we don't have enough friends on our side to go short, we got to go up to find more. They're all sitting up there waiting to buy price at a discount. And then the opposite's true if we're wanting to go long. If we go up long, then we hit a wall and we need more friends, we got to go down to find them because they're sitting there waiting for us to come get them. They'll be able to get in at a discount. Everybody will be happy, and we'll go through and break that prior resistance. So pretty much putting it very, very simply, I look at the 1 hour chart when looking at NQ. And if I'm trading forex, I'm typically looking at the 4 hour or the daily chart. And I'm looking for areas of liquidity, whether that's a fair value gap, whether that's an order block, a breaker block, or a balanced price range. All 4 of those things are ICT concepts. But I'm looking for where price is going and where it could flip around. So another way to think about it is, where would I go long if I'm in a short? If I'm in a short, I want price to go down, but where is a point where I would want to go and go long if I was looking to go long? And that's the area that I'm looking for to reject. But in terms of a daily bias, I'm marking out a chart like this where I have several different areas of liquidity, and I'm just seeing how price reacts at each of them. If it rejects off of this area, I'm looking to go the opposite direction because it got the liquidity it needs. It's probably going to find some more somewhere else. So that is the TLDR. PG is paper gains. Big K Daddy. Wall family. Sorry, so many questions. Sorry, can you give us your take as to how to pass evals? Percent risk, dollar amount to sign up for, dollar profit per goals. First of all, don't be sorry about questions. I enjoy helping. Second of all, I think that the biggest, I get asked that question all the time, and it's not a bad question, especially if you're thinking about it in a microscope. The problem with that question is it doesn't sound like you have your own strategy to a profitable strategy that you can trade on by your own. If I'm wrong in that, that's awesome. Your risk should be, for me, so not your risk should be, because none of this is financial advice. But for me, my risk is how much can I risk without getting myself in too much trouble. And so like we talked about a little bit earlier, for me, I don't lose more than 5 trades in a row. I mean, I just looked through my trade tracker. I'm looking again. I lost 2 in a row here, lost 2 in a row there, 2 in a row. I lost 2 in a row. Scrolling, 2 in a row, 2 in a row. That was all of 2022. If I look at 2023, I lost 1, all ones. I lost 3 in a row once, with one of them being a half loss. I lost 3 in a row again with a full loss. 3 in a row with a half loss, so half R. 3 in a row with a half loss. 3 in a row with a half loss. 3 in a row full loss. And that's it. I haven't even lost 4 in a row yet. And that's from all of 2022 to where we're at in 2023 of tracking. So that is almost 1,000 trades, which is enough. So what I would do is, if I was wondering how much I can risk, I would go and back test my strategy and see how many times I lose in a row. And a big struggle that people have is that when they back test, they kind of have an idea of what's going to happen, and then they don't take their losses like they would in real life. So they can see, like, okay, I saw when I was going back and back testing, I saw that we were going down, so I'm not going to take it long. So don't cheat yourself when you're back testing. That does you no good. But in terms of percent risk, you'll find that by determining how many times you lose in a row. Dollar amount to sign up for, that's a personal journey. If you can afford to do 300Ks on Apex or 150K on Top Step or a 200K on the forex firms, if you can afford to do that a couple times, then, do whatever you're comfortable with. There's no like one size fits all. If you're there's people who I teach who are college students who can barely afford to do the 50K on an 80% off. Then there's people that I know who throw $1,000 at an eval on a brand new company that I've never heard of. So it's all determined on what you are willing to risk. And then I always give myself 2 to 4 times to try that challenge, just especially if I'm newer. And then dollar profit per daily goal is another personal decision. There needs to be a point where you shut it all down. I think, at least for me personally, my biggest struggle as a trader right now is I spend my profit before I actually withdraw it. So, if I make $200, I instantly think that's an electricity bill or that's my gas bill. And then if I lose it, I'm like, well, shoot, that was my gas bill. That was my electricity bill. So for me, my daily profit's going to be different because of my struggle with that. you know, if I didn't have that struggle, I could probably never have a daily profit goal and make a lot more money. But I'm comfortable where I'm at. So, any other questions? I got all caught up. Yeah, like I said, don't apologize for asking questions. That's what I'm here for. I want to help people learn for as little cost out of pocket as possible. I'm more of a crypto guy. Are you strictly equities? I am. I will never touch crypto again. Like, the stock market's already bad enough for me because it's open for most of the day, and I am pretty decent at what I do. That I can make money when I see a good setup. And on crypto, if I am up at 10 p.m. looking at a setup, my wife's not going to be happy. So, and honestly, work-life balance is why I do this. I mean, I only trade from 9:30 to 11. Paper's one of the only guys I know that trades all day, but I only trade 9:30 to 11, and then I'm done. So I don't want to look at the charts again. I want to spend time with my family, doing hobbies, working out, etc. And if I can afford to do so, that's what I'll do. TK says, thanks for your time. You're very welcome. Wall family, all good. You'll never close a trade at a TP. You'll always trail a stop. Correct. Except at when I hit 10R, which is 20 or 200 points, I'll close out fully, just so I can stop watching. So typically my trades are 1R, 2R, 4R. Sometimes I'll take a trim at 2.5, but generally it's 1, 2, 4, and then 7, and then 10. And by 7R, I'm down to my last 2, and then 10R, I'm out fully. So I don't think I'll ever have the ability to go past 10R again, which I'm fine with. 10R is 200 points. On a 1 micro, that is $400. That's enough. Alrighty. You know the thing. Yeah, that what makes sense. What kind of leverage do you typically do? I trade with prop firms, so they give me the funding and I trade with them. How are you saving currently for retirement, or is trading the retirement? Trading will be the retirement. I mean, I obviously have long-term holdings, but most of my stuff is like most of my profits, if they don't get reinvested, go straight into long-term. Kirby, just saw your ping. If there's so many fair value gaps above, how do you differentiate with all those blocks? Seems all the fair value gaps can be overwhelming. It can be, but again, I'm not looking for the magical one that's going to reject. I'm looking for which one, after it enters, does it reject? I'm not looking for, okay, when it enters, it's going to reject. I'm wondering if it's going to reject. So I don't know which one it's going to reject. It could do one of these. It could jump through this one, jump through that one, jump through this one, hit this fourth one and go down. And then after that happens, the 3 or 4 that got left behind are going to be invalidated. So I'll take them off my chart. But until they are invalidated, I will be holding. So. Well, family said, great, thanks for your help. You're welcome. Anytime. As always, I do answer questions I do answer questions most of the time, not around the clock. That's what I was going to say, but I do answer questions. So if you do have a question and and you think that other people might have that same question, please ask it to me in your server and I will answer it so that other people can see it. And that's the best way. Alrighty, so no more questions that I see coming through. Thanks for everyone for coming out. It is already recorded, so if you go into my live streams, you'll see a bunch of my live trading, but this will be the only one that is titled "How to Determine Daily Bias," or I will rephrase it to how I determine daily bias, something like that. But thanks for coming out. I will see you all here on Monday. Alrighty, so have a great weekend, safe weekend, make good choices, and yeah, see you guys all here on Monday. See you guys.